Mein nächster Interviewpartner ist Shrenick Shah. Er ist einer der beiden Lead Portfolio Manager des Global Macro Opportunities Fund von JP Morgan Asset Management. Shrenick, nice to have you here with us.
Good
afternoon. In a presentation of your fund, I saw that you are describing your concept as seeking to take advantage of the mispricing of macroeconomic trends using a flexible and focused approach. Big words, but explain us a little bit what is behind this idea or this concept.
Sure. So very simply, as you mentioned, think about macro, focused and flexible. So macro means that we do high quality research on the underlying macro trends to allow us to take high conviction bets. And high conviction bets allow us to have high return target expectations. So focused. So our conviction levels allow us to take bets that are quite concentrated. Again, this allows us to take larger bets and allows us to deliver an expected higher return. And then flexible. So we know that we're going to experience more volatility and more twists and turns in markets in the coming quarters. So an investment process where it's able to change the direction or the contour of the portfolio fairly quickly is going to be very important and quite valuable in the coming quarters.
Not only you are predicting that we will see a difficult environment for the traditional investors in the coming years, where expected returns for traditional asset classes will be lower than those enjoyed in recent years. Can you put that into concrete or specific numbers? What do we have to be prepared for?
So at JP Morgan, we are very lucky. We have a large team that does long-term forecasts, and there's a lot of research and investment into this team. So 10 years ago, that team was expecting a balanced fund, so 50% equity, 50% fixed income, a balanced fund to return on average 8% per annum. Today, looking out for the next 10 years, the same team forecasts a return of only 4%, so less than half. So investors and clients will need to think about ways to make up the difference between what the market's going to give you in terms of the beta return and where client expectations are, which I suspect are probably north of 4% per annum.
You are managing the fund together with James Elliott as the second lead manager. How are we to imagine this split or partitioning between you and your colleague? Is the question of who does what the best?
So my esteemed colleague Jimmy Elliott is an exceptional portfolio manager. His specialisms historically have stemmed from investing in equities. So he does concentrate more on the equity portion of the portfolio. My background is also in equities, but I've experience in fixed income and currency as well. So I tend to also focus a bit more heavily on those other asset classes. But in essence, one of the most important aspects of the investment process is that every member in my team and my co-portfolio manager Jimmy understand every aspect of the portfolio, and that allows us to have a strong holistic portfolio that is going to deliver good returns with good levels of robustness.
I know that you are distinguishing between risks on the one hand and areas of strength on the other hand. Let's stay with the risks. Where do you expect those?
So risks, we always work in this framework. What are the risks and what are the positives? So starting with the risks currently, I think weaker than expected global growth is a key risk to asset markets this year. Maybe one that's a little bit less visible is the concept that central banks in the current world have got limited space to ease policy. And central banks have eased policy historically and provided a cushion to markets. So without that cushion, markets are going to be that much more volatile. And we can talk about many geopolitical risks. I'll just list them, we won't go into them, but the dispute between China and the US is a strategic, long-lasting dispute. We've got the outcome of Brexit yet to come this year. In Europe here, we've got the outcomes of the European parliamentary elections. So this year is peppered with risk events from that angle too.
And what about the opportunities or the areas of strength, as you call it? Are there any looking ahead into 2019?
So yes, there are, clearly. So one of our most positive themes is one called widespread tech adoption. And this is a long-term theme where we expect the technological revolution to really drive through and offer very good investment opportunities independent of where the economic cycle goes. So our holdings in MasterCard or in Visa or in Google are representative of opportunities on a secular basis. Very short term, the positives could come from extra strong Chinese stimulus. It could come from let's say a handshake between China and the US on the trade dispute, which we think is unlikely but could happen. And maybe lastly, if the Fed officially says we are on hold for some time, then that may be very positive for emerging market assets.
Thank you very much for being with us.
You're welcome. Thank you.
Thanks a lot.